On the show, and we're also joined by Abneesh Roy, Executive Director at Nuvama Institutional Equities, who joins in as well. Good morning, gentlemen. Thanks so much for joining in. Well, Abneesh, let me come across to you first, because Pidilite is likely to be the stock in focus in the initial part of trade. That's because there was a margin miss and there was a volume miss as well. And as we all know, it always trades at elevated valuations. What would you do with the stock from here on, given that it's going to start on the back foot? And would you look at buying into it?
Yeah, there is a slight miss. Results came post-market. So yes, there could be slight negative reaction. We don't expect a significant correction given FY24 will see benefit of full correction in the VAM prices. Even this quarter, if you see, the miss in EBITDA is more because of the slight miss in terms of the revenue. Margins have expanded and margins are at a 7-quarter high. Going ahead, discretionary slowdown is what is impacting Pidilite, because Pidilite, if you see, the product Fevicol is used in almost everything. So the slowdown which we are seeing in the discretionary segments, essentially footwear, apparel, furniture, etc., to some extent, clearly, we are seeing the impact of that. But having said that, I think the EBITDA growth for Pidilite will be strong. Pidilite has also entered decorative paints, which we think is a step in right direction. But we don't think that Pidilite will be spending very high on advertising. It's just through the existing distribution and channel. They'll try to sell incremental paints. It will not be a very cutthroat battle with the market leaders.
Okay.
Good to have you with us as well. Abneesh, good morning. Your thoughts, Abneesh, on this TCNS ABFRL deal, which the market doesn't seem to be happy at all with. TCNS was down some, I think, 20%. ABFRL was down 5-6% yesterday. Just your thoughts on both, assuming, viewers own these shares. What would you recommend?
Yeah, I think this TCNS sale has been under discussion for a long time. And of course, TCNS, if you compare the growth versus the other apparel players, clearly it has lagged. So definitely what we see is ABFRL has done multiple acquisitions. Also, it has gone into innerwear on its own organic manner. So we do see that, yes, ABFRL is a much larger company, understands retail much better. Also, in terms of portfolio, if you see, ABFRL now gets a play in the ethnic wear, especially in the mid-end. Market, of course, has been concerned that ABFRL has been doing multiple acquisitions in the last 2 years. Of course, because of COVID, a lot of the acquisitions became possible. And ABFRL has been closing the gap in its portfolio. Our sense is now we are at the fag end in terms of the M&A. In terms of the EPS dilution, yes, first year, of course, will be EPS dilutive. And in terms of the share dilution also for ABFRL, 5.7%. So we prefer ABFRL over TCNS for sure. But definitely this has been an acquisition which has been under discussion for a long time. And we expect ABFRL to definitely scale up TCNS given its better understanding of the retail over a 2 to 3 years time frame.
Okay, yesterday the big mover was Marico. Solid set of numbers. The street liked it. What do you do with the stock from here on? What's the rating? What's the target price out there?
Yeah, it was a overall good set of numbers with 5% volume growth. The margin expansion, I think, was the key surprise. In FY24, Marico's Saffola Foods portfolio also will see a decent growth with 850 crore revenue target. This quarter, Saffola edible oils was quite weak. And this we also saw for Adani Wilmar, for example. There has been, of course, in-home consumption in the base quarters in the COVID era. And also price cuts have happened. My sense is further price cuts in edible oil is something which government is also driving. So overall, we like Marico from longer term perspective. But given the move which has happened yesterday, I think near-term upside will be limited. In fact, we prefer Britannia over Marico, given the kind of numbers which Britannia reported, 12% PAC growth, 45% EBITDA growth, and wheat also for next year, if you see, the crop versus initial expectation has been much better. 30-40% higher government collection has been there. So we prefer Britannia over Marico at current levels. But yeah, Marico's margin performance was quite decent.
Okay, but on Britannia, what kind of valuation headroom does it have now? Because, that is the big concern, right? That there is growth, of course, but it doesn't come with any valuation headroom. Your thoughts?
So three things, Sonia, will happen. One, of course, Street was a bit disappointed with the 2 to 3% kind of volume growth which they reported. But customer doesn't buy 100 gram or 200 gram of biscuit. He buys packs. So packs was 12% growth. Now what will happen is in FY24, Britannia will give back the grammage cuts which they had done. Now they'll give back the grammage back to customer. So volume growth will revert to a much better number. Of course, with wheat also crop being better than expectation, my sense is the EBITDA margin and gross margin good performance will sustain. If you see in terms of croissant, dairy and rusk and cake also, they have been doing well. So currently if I see, yes, stock is now out almost 40 times FY25. In fact, we upgraded our numbers by 3 to 5% EPS for next 2 years. But Go Airways going away as a concern, that is a positive because that was seen as a concern. So we don't see any direct, indirect exposure to Go Airlines, but we continue to monitor that. But yeah, on the face of it, it seems that it's a positive.
Gurmeet, just a few stocks your way. Now, one is earning.